Having a good lender is everything in a real estate transaction. It can really make or break the deal. So I'm rolling up on some of my favorite lenders, answering some of my buyers' questions and getting the info. Let's do it! Today I'm here with Masters, and we are going to talk on the topic of student loans. Can I still buy a house if I have student loans?
Absolutely. There are a few things that you have to look at on the program. So, for example, FHA use 1% of the balance of the student loans as a payment when we're calculating the debt-to-income ratio.
Okay.
So, depending on how much you have in student loans, it could really affect what you could actually borrow.
Okay.
So that's one thing you have to keep in mind. Now, it gets a little easier if you go with the conventional loan.
Mm-hmm.
So with the conventional loan, you are able to, if you have like an income-based deferment plan,
okay,
you can use the payment when calculating your debt-to-income ratio. So sometimes that really helps out if you have good enough scores to do a conventional loan. And it makes it where you can, where you'll be able to borrow more. That's just in a nutshell some of the things as a lender that we look at.
So to get the conventional loan, what is the minimal score that I need to have?
The minimum score is a 620, but just because you have a 620 doesn't necessarily mean that you can go conventional, because there are some things that you have to look at. So if you have any derogatories within like the last 12 months, that may pose a problem. So just because you have the minimum doesn't always necessarily mean that you'll be able to be approved for conventional.
Okay, so if I'm going to be looking to purchase a home soon, and I have student loan debt, and I haven't set up any arrangements or anything like that, what do you suggest for me to do?
Well, it's going to depend on the amount that you have in student loan debt. So if, for example, you have a significant amount, like maybe
40?
Over 60,000,
okay,
so it just really depends on your other debt too as well.
Okay.
So like I said, I mean, your debt to income ratio is very important when we're considering a product. So most of the time for conventional, you're gonna at least have to have a 45% or less debt to income ratio. With conventional, sometimes you can go up to even 50%. FHA is a little bit more lenient, where you can go up to the mid 50s, 55, 56 debt to income ratio, if you have over a 620 credit score. So it really depends on several factors: debt to income ratio, your income, the cost of the property, how much you're putting down. So there's a lot of variables in that.
For your debt. So can I create a payment plan if I'm qualifying for conventional, like a month in advance, or like how soon does that have to be done? Should I wait? Does it have to be 6 months of payments that they see, 3 months?
Sometimes it depends on the program. Like some programs require that the repayment plan is at least for 12 months, or you have at least 12 months left on the payment plan. But a lot of times it's just as long as you're in an income-based repayment plan, because that's the important terminology there. Income-based driven or income-driven repayment plan is going to determine, if we can use that payment that you're actually paying for your debt to income ratio.
Okay, so sometimes I have clients that tell me that they're in deferment and they're paying $0.
Mm-hmm.
Is that where the 1% would come in on the FHA?
Well, if they're in deferment, if it's FHA, you're gonna have to use 1% of the balance anyway.
Okay.
All right.
So
or
1%.
Yeah, or the fully amortized payment. So if you have a payment that's higher than the 1%, then you're using that payment.
Okay.
But if you don't have a payment, if it's just in deferment, then you're gonna use 1% of the balance. So if you have $100,000 in loans, then you got to use $1,000 as a payment when calculating your debt to income ratio.
And that will increase your debt significantly.
Right.
Sometimes disqualifying people from being able to afford a home.
Right.
Or qualifying for much less. So because I have a lot of people, they think that they're okay. I'm in school still, so I don't have to pay.
Right. Well, we still have to use that.
Still use the 1%.
Yeah, we're still, for FHA loans, yes, we're still using 1%.
But if they can qualify for conventional, then if they're not paying back yet,
then we use the 1% on a Fannie Mae conventional. We use 0.5% on a Freddie Mac conventional.
Okay. And all of these terms and numbers can change tomorrow. We never know. But these are estimated based on today. Where are we at? 2020. January 2020. So I think that I'm trying to figure out if I have any more questions in regards to that. So to sum it up, FHA is 1% unless you're already in a payment plan.
Right.
If you can qualify for conventional, there's a lot of factors to qualify for conventional, but they can take whatever payment plan or payment arrangement you're in.
If it's an income driven repayment plan.
An IBR. Is that what it? Wait, income based. What is it called?
Something like that. Income driven repayment plan. I've seen it named several ways.
I was like, I think I saw it as IBR. Anyway.
Yeah.
Hope that helps. If you have student loans, know that you can still qualify, but you definitely need to reach out to a lender to make sure that you can qualify so that you really understand the numbers, because everybody's numbers, everyone's situation is completely different, but we are here to help. If you have any more questions regarding student loan payments, how you need to get ready to get on the process to home buying, you can reach out to either one of us. His contact information will be below. Hope you enjoyed this video, and I hope that you learned something. All right, bye.
Bye.
Hey there, thank you so much for watching. If this video was educational for you, or if you learned something, don't forget to like, share, and subscribe. See you next time.